When a billionaire finally decides to speak, people listen. But when Warren Buffett exposes the money trail behind Trump's campaign losses, someone gets very angry. Warren Buffett has never been the type to shout, but when he talks about money, power, and political influence, the world pays attention. And this time, his comments hit directly at the heart of Donald Trump's campaign troubles. Today, we break down what Buffett revealed, why Trump is furious, and what it means for the future of American politics. Warren Buffett has a philosophy that has guided him through decades of financial storms, market cycles, and global uncertainty. Follow the money, and you will find the truth. When he applied this same principle to the political landscape surrounding Donald Trump's recent campaign losses, the reaction was immediate and intense. Buffett didn't raise his voice, he didn't accuse, and he didn't sensationalize. He simply pointed out what any seasoned investor would recognize as a fundamental pattern. When major donors begin stepping back, it's never accidental. It's a calculated move rooted in incentives, risk assessment, and long-term expectations. Buffett explained that wealthy backers are not emotional participants. They don't withdraw support because of a single headline or a momentary controversy. They step back when the overall structure they're investing in no longer aligns with the stability they require. In the same way, Buffett evaluates whether a company has a durable competitive advantage. Donors evaluate whether a political campaign demonstrates clarity of purpose, reliability of leadership, and a strong likelihood of future success. When any of these are compromised, the capital begins to shift. In this case, Buffett highlighted something that many observers had overlooked. The financial retreat from Trump did not begin abruptly. It began quietly, in phases, with investors who previously contributed large sums choosing not to renew their commitments. Some decreased their donations, others paused them entirely, and a few redirected their funds toward alternative candidates who appeared more disciplined and less volatile. Buffett emphasized that these decisions weren't personal, they were practical. Donors operate like portfolio managers. If an asset begins showing signs of increased risk without a corresponding increase in potential return, the smart move is to reduce exposure. Buffett's analysis also underscored a deeper reality about power and influence in America. Campaigns, like companies, require consistent and predictable messaging to maintain confidence. For major donors, unpredictability is more damaging than disagreement. They don't need to align perfectly with a candidate's views. They need to trust that the candidate can maintain a steady path. Buffett hinted that Trump's shifting strategies, combined with ongoing legal battles and public confrontations, created an environment donors perceived as unstable. Uncertainty in the world of high finance is a warning sign that triggers defensive action. His comments also revealed an important psychological insight. Investors are trained to avoid situations where the outcomes depend on personalities rather than principles. If a campaign appears increasingly centered around retaliation, emotion, or personal conflict, it loses the structural integrity that investors rely on. Buffett noted that when the foundation becomes unstable, institutions and donors both begin searching for safer ground. And once the migration begins, it rarely reverses without significant shifts in behavior or messaging. Buffett's remarks were not an attack, but a lesson in economic reality. Money behaves rationally even when people do not. The flow of donor funds mirrors the flow of capital in financial markets. It gravitates toward competence, clarity, and long-term security. By pointing out that some of Trump's most influential backers had begun withdrawing precisely because they no longer saw those qualities at the level they once did, Buffett illuminated a truth that resonated far beyond politics. The same principles that govern successful investing apply to leadership, demonstrate stability, inspire confidence, and people will invest in you. When those elements weaken, even the most loyal supporters begin to reconsider their position. Buffett's explanation for why key donors backed away from Trump is grounded in timeless investment logic. People with substantial capital prioritize stability above everything else. They do not make decisions based on emotional impulses or short-term drama. They assess risk the way Buffett has done for decades by examining consistency, leadership quality, and long-term direction. When Buffett discussed the donor shift, he framed it in the same rational, disciplined mindset that guides his investment philosophy. Smart investors, he said, value predictability because predictability creates confidence, and confidence is the foundation upon which all major financial commitments are built. He pointed out that a political campaign functions much like a large corporation. It must show a clear path forward. It must articulate goals that are achievable and grounded in strategy rather than instinct. It must present leadership that is steady, reliable, and capable of making decisions that inspire trust, not concern. When donors sense friction, inconsistency, or a growing lack of control, the natural reaction is not confrontation, it's retreat. Donors don't announce their concerns publicly. They simply reroute their capital. For them, money moves silently and strategically. Buffett emphasized that many of Trump's major donors are individuals who built their wealth through calculated, methodical decision-making. They are accustomed to evaluating risk in competitive markets where one wrong move can cost millions. When they began to see Trump's campaign surrounded by escalating legal challenges, mixed messaging, and public conflicts, they interpreted it as a loss of structural discipline. To them, it wasn't about whether they liked Trump personally. It was about whether the campaign still resembled an investment that could deliver a reliable return. Buffett explained that when people who specialize in risk assessment detect instability, they do not hesitate, they reallocate. Another factor Buffett highlighted was the shift in global financial conditions. With economic uncertainty rising, high-level donors are becoming more selective about where they invest their influence. They want campaigns that reflect resilience and precise planning. If a campaign appears reactionary or unpredictable, it introduces a level of risk that seasoned donors consider unnecessary. Buffett noted that campaigns are judged not merely by their messaging, but by their internal structure. Investors observe how the team operates, whether strategies align, and whether leadership demonstrates self-control and vision. When these elements are inconsistent, donors interpret it as a sign that challenges will only escalate as the campaign progresses. Buffett also touched on the importance of strategic confidence. When a candidate projects stability, donors feel they are supporting someone who can withstand pressure and deliver results. But when campaign decisions appear driven by emotion rather than strategic planning, wealthy contributors begin to doubt whether their investment will preserve its value. Buffett has often said that confidence is the currency of leadership, and in politics, that currency determines whether funding flows in or dries up. Ultimately, Buffett's analysis revealed something donors rarely say aloud. They are not loyal to personalities. They are loyal to outcomes. When outcomes become uncertain, they step away quietly. Their withdrawal from Trump's campaign was not a sudden betrayal, but a gradual shift that reflected their long-standing investment philosophy. Buffett made it clear that these donors were simply acting on the same rational principles that built their wealth, avoiding unnecessary risk and moving their capital toward opportunities that demonstrate discipline, clarity, and stability. Buffett's discussion about the rise of silent donors was one of the most revealing parts of his analysis because it highlighted a shift happening behind the scenes, one that most people never see, yet one that determines the trajectory of modern political power. These silent donors are not the loud, attention-seeking contributors who appear in headlines. They are individuals and institutions with immense financial capability who prefer to move discreetly, strategically, and with a long-term mindset. Buffett explained that these donors operate with the same caution and foresight they apply to large-scale investments. They look at political campaigns not as emotional battles, but as ventures requiring structure, predictability, and a credible plan. He noted that the silent donor class has grown more influential in recent years because they understand that politics has become increasingly volatile. Public donors often contribute for visibility or influence, but silent donors seek stability above everything else. They analyze trends, evaluate risk, and watch how candidates respond to pressure. They pay attention to management style, tone, and the ability to maintain discipline when the spotlight intensifies. For these donors, emotional turbulence is not inspirational, it's a danger sign. Buffett emphasized that this group is composed of data-driven thinkers who prioritize measurable outcomes. When they saw Trump's messaging shifting each week, legal issues mounting, and internal disputes within his campaign emerging, they interpreted it as the type of volatility they are trained to avoid. Buffett's insight extended deeper. Silent donors do not cut ties abruptly. Instead, they slowly reduce their funding, diversify their political contributions, and reposition themselves to candidates whose behavior aligns more closely with strategic leadership. He pointed out that several prominent donors who once backed Trump heavily have now adopted a spread funding model, quietly dividing their support across multiple candidates for the sake of risk mitigation. This shift signals not rejection, but a recalibration of trust. To them, political influence is a portfolio, one that must be protected from sudden instability. Another powerful point Buffett made was that silent donors prioritize long-term national stability, not short-term political emotion. They want leaders who can reassure markets, maintain policy consistency, and avoid unnecessary confrontations. Trump's unpredictable style, which once energized a large portion of the population, has become a liability in the eyes of donors who measure success through stability, economic predictability, and global perception. Buffett explained that when these donors sense a campaign moving toward unpredictability, they don't argue, they simply redirect their resources. He also highlighted that silent donors rely heavily on private intelligence polling data and economic indicators that the public rarely sees. This means that their decisions are rooted in information, not speculation. When that data began suggesting that Trump's path to victory was narrowing and fracturing, they adjusted their contributions accordingly. Buffett's message was not that Trump lacked support. It was that the nature of support had changed, shifting from concentrated high value commitments to scattered risk managed contributions. Buffett concluded that understanding silent donors is essential to understanding modern campaigns. These individuals aren't swayed by noise, emotion, or political drama. They are influenced by patterns, performance, and the perception of leadership strength. Their gradual departure from Trump's campaign reflected a deeper concern whether the long-term vision, structure, and discipline required to lead effectively were still present. In Buffett's world, money never leaves without a reason, and silent donors, perhaps more than anyone, follow that principle with unwavering precision. Trump's anger, as Buffett described it, wasn't rooted in the criticism itself, it was rooted in the exposure. In politics, image is currency and perception shapes power. Trump has always presented himself as someone backed by unwavering loyalty, especially from wealthy supporters who never flinch, never retreat, and never question. When Buffett calmly revealed that several major donors had quietly stepped away, it wasn't just a financial blow, it was a strike at the narrative Trump has built for years. Buffett didn't attack Trump personally. Instead, he highlighted patterns in donor behavior that Trump didn't want publicized. That is what ignited the frustration. Buffett explained that campaign donors operate in a world of strategy, not emotion. They rarely make dramatic exits. They simply stop reinvesting when they sense growing instability. Trump, however, values loyalty as a public demonstration of strength. To him, the withdrawal of donors signals betrayal and worse, vulnerability. When Buffett revealed that these donors did not vanish due to political pressure, but because they saw rising uncertainty, Trump interpreted it as an attack on his leadership. Even though Buffett's tone remained analytical rather than confrontational, for Trump, losing donors doesn't merely mean losing funds. It means losing the image of control he works so hard to maintain. Buffett's comments also angered Trump because they shifted the focus from personal loyalty to economic rationality. Trump has long thrived on the idea that loyalty is fixed and unconditional. Buffett, in contrast, emphasized that loyalty in the financial world always has conditions. Donors don't walk away because they dislike a speech or disagree with a single decision. They walk away when the overall risk outweighs the potential reward. Buffett stated that political support behaves just like capital. It flows towards strength, stability, and credible strategy. When a campaign seems increasingly centered on courtroom battles, shifting narratives, and public confrontations, donors interpret it as an environment where their influence and investment may yield diminishing returns. Another aspect Buffett touched on was the perception of long-term viability. Donors who invest heavily in campaigns want confidence that the candidate can withstand future pressure without fracturing. Trump's responses to legal challenges, media conflict, and internal disagreements have at times amplified the sense of unpredictability. While this unpredictability energizes parts of the public, major donors who think in decades, not days, see it as a structural weakness. By bringing this into the open, Buffett forced a conversation Trump hoped to avoid. He revealed a hidden truth. Some donors were no longer sure that Trump's campaign had the long-term stability that massive investments require. Buffett also underscored that donors are drawn to leadership that inspires calm, not chaos. His insistence that confidence, not confrontation, is the mark of true leadership challenged Trump's approach. Buffett explained that leaders who maintain composure win trust more effectively than those who respond with aggression. To Trump, whose political style is built on fighting back, this perspective seemed like a coded criticism. And when such a critique comes from someone with Buffett's influence, it carries weight far beyond commentary. It shapes donor psychology. Perhaps the most unsettling part for Trump was that Buffett's analysis resonated deeply within the donor community. Buffett outlined the logic behind their withdrawal with such clarity that it transformed a private trend into a public narrative. Trump saw this as undermining his momentum and altering the perception of his campaign's financial support. By exposing the reasoning behind donors' decisions, Buffett essentially provided a roadmap explaining why Trump's fundraising challenges had grown, and once that truth became visible, Trump's frustration surged. Buffett's message to Americans in this moment was not driven by political preference, but by principle he has repeated throughout his life. Money, influence, and support always follow logic. He wanted the public to understand that donor behavior is not a mystery and not an emotional response to headlines. It is a reflection of deeper forces that shape leadership and national direction. When key financial supporters withdraw from a political figure, it signals something far more significant than political disagreement. It is a reflection of how that leader is being evaluated in terms of competence, vision, and long-term stability. Buffett emphasized that this is not just about Trump. It is about how power works in a system driven by confidence. Buffett's core point was that money does not leave without cause. It seeks structure, clarity, and credibility. When donors distance themselves, it is not an impulsive reaction. It is a response to patterns they observe. Buffett wanted Americans to pay attention to these cues because they reveal more about the future of a campaign than polls or speeches ever could. He explained that donors have access to sophisticated data, private analysis, and forecasting models that measure a candidate's viability in ways the public never sees. When those indicators begin to decline, donor movement follows swiftly, though quietly. Buffett's message was that this flow of support is one of the clearest barometers of political momentum. He also pointed out that the role of donors is often misunderstood. Many people assume wealthy supporters simply back candidates because of ideology or personal relationships. Buffett explained that real donors, those who wield multi-million-dollar influence, operate far more strategically. They want leaders who display discipline under pressure, consistency in direction, and the ability to navigate crises without escalating them. When donors see a leader reacting emotionally, shifting narratives, or becoming entangled in constant conflict, they interpret it as a sign of diminishing executive capacity. This interpretation influences not only financial support, but also broader confidence in the candidate's ability to govern effectively. Buffett's message extended beyond campaign financing into leadership lessons for the entire country. He stressed that America's future depends on electing leaders who embody stability, not volatility. He spoke about the importance of trust, a trait he often calls the currency that outlasts money itself. In his view, when a leader begins to lose the trust of those who are most attuned to risk, it signals a deeper erosion of the foundational qualities needed for effective governance. Buffett made it clear that this loss of trust is not an indictment of one individual. It is a universal reality faced by anyone in a position of authority, whether in business or politics. Another subtle but powerful point Buffett raised was the difference between popularity and confidence. A leader can be popular but still lose the confidence of those whose decisions shape the direction of policy, markets, and investment. Donors, investors, and institutions place value on consistency, not charisma. They look for long-term vision rather than short-term emotion. Buffett encouraged Americans to distinguish between noise and signal, noting that donor movement is often the clearest signal of how a leader is truly perceived by those responsible for major national investments. Ultimately, Buffett's intention was to remind Americans that leadership at its core is judged by the stability it projects and the trust it builds. Donors withdrawing from a campaign is not only a financial issue, but a reflection of confidence collapsing at the highest levels. By illuminating this dynamic, Buffett hoped to show the country that the path to progress lies in choosing leaders who inspire trust through discipline, thoughtful decision-making, and a commitment to long-term stability over momentary victory. Buffett's perspective on leadership has always been rooted in one central idea: leadership is an investment. It is something people buy into not with money alone, but with trust, belief, and the expectation that the person they support will deliver stability, clarity, and long-term value. When Buffett spoke about Trump's donor issues, he wasn't merely commenting on campaign finances. He was highlighting a universal truth about human behavior and decision-making. People invest in leaders the same way they invest in companies. They assess reliability, discipline, performance under pressure, and the strength of the vision presented to them. When any of these qualities begin to fade, investment naturally follows the path of stronger opportunity. Buffett emphasized that trust is the ultimate currency. Everything flows from it. In business, if a CEO loses the trust of shareholders, the stock price falls. In politics, if a candidate loses the trust of donors, support dries up and enthusiasm weakens. Buffett explained that trust isn't built on dramatic statements or bold promises. It is built quietly through consistency. A leader who constantly shifts strategies, focuses on immediate conflict rather than long-term planning, or responds emotionally to challenges, loses the steady confidence that major supporters require. Buffett's point was that donors weren't just withdrawing money, they were withdrawing belief. He also pointed out that real leaders understand the power of predictable discipline. Investors gravitate toward environments where they can anticipate how leadership will respond to crisis. When leaders show stability, followers feel protected. When leaders show volatility, followers feel exposed. Buffett explained that Trump's donor issues were not simply about political disagreements, but about uncertainty surrounding how he would navigate the road ahead. Donors invest heavily when they feel the future is structured. They pull back when they feel the future is reactive. Buffett stressed another important aspect of leadership, the ability to inspire upward momentum in his world. Companies that grow are those whose leaders encourage innovation, responsibility, and confidence. The same applies to political campaigns. Donors want to feel that their support is contributing to something constructive, not merely fueling conflict or chaos. When a campaign becomes driven more by retaliation than direction, donors observe it with the same skepticism they use when evaluating a company that spends energy on internal battles rather than product development. Buffett's insight was that donors didn't see a return on emotional expenditure. They wanted a return on strategic vision. Another powerful idea Buffett shared was that leadership is about the long game. Leaders who endure are those who prioritize future impact over present noise. He noted that many donors shifted their support because they no longer saw a sustainable trajectory in Trump's campaign. A leader must project not just strength today, but stability tomorrow. If stability is missing, long-term investors step away because their decisions are designed to outlive moments of drama. Buffett wanted people to understand that this is not personal, it is structural. Finally, Buffett reinforced that leadership, like any investment, requires clarity. People follow leaders who communicate a direction that aligns with growth, unity, and resilience. When a leader loses that clarity, confidence weakens. And once confidence weakens, support begins to dissipate. Buffett's message was that the withdrawal of donor support isn't merely a political story, it is a case study in leadership fundamentals. The stronger the trust, the stronger the investment. When trust fractures, the investment naturally moves on to leaders who demonstrate steadiness, discipline, and vision that inspires long-term belief. Buffett's revelation isn't just about Trump's anger or donor decisions. It's a lesson for anyone who wants to lead. Build trust, build stability, build a vision people want to invest in. When those fundamentals are strong, no campaign, no company, and no dream is too big to achieve.